Good morning. Today is Sunday, September 8th, 2024, and this is the weekly Bitcoin price forecast. So, looking at where Bitcoin went in the last week and where it could potentially go in the future. So we have been, this is the monthly chart. So, we have been down, 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 as you see, really since March of this year. So, like, there was a kind of a consolidation here. So, there were some up months, but eventually it broke to the downside. Overall, I'm not super worried about that, and I'll explain why later. Really, if you're looking at it, the economic conditions right now, for anyone looking, is they're not great, right? You don't have to be a super scientist to understand, or an economist, I should say, to understand that the overall conditions right now are not optimal. However, that does not mean that things could not change in a pretty quick manner. So, really, what you have, I mean, upcoming, you have elections, um, you have rate cuts potentially, right? And then nothing's guaranteed yet, but there's a high probability that you have rate cuts in the next couple of weeks, which generally means more liquidity, more money moving from money market accounts to the equities markets or crypto market or whatever it may be, and then overall global liquidity moving up as well. So here is the monthly chart again going down, not too much to see. Weekly chart, it's again very much a wave pattern here. So you have like the down pattern, up pattern, down, up, down. And really, I've been talking about this bull flag, but you see we've come so far here. You had a smaller consolidation here. This is a huge consolidation. A long, like it's huge. It's big in size, big in range, pretty much, I should say. So like you see, even like these small consolidation periods can just lead to a rapid rise in price very quickly, and then they shake you out for a month, and then a rapid rise in price quickly. I think you can see the same thing here. Like you'll start to see the same type of weeks like run up in that manner. So let's take a look at the chart. Put the drawings on. You run up to your all-time high here in March, and again, the zigzag pattern that you end up having. We're still the reason that I said earlier that I'm not super concerned about where price is right now, because you're at 54,000. You still have the bottom of this channel that is to be tested. I believe for a long time that this is a bull flag. I've been talking about this really since about May, early May time frame. I thought that it was forming. So about right here, and then this has continued to play out. And I've talked about this long-term support zone too. So you see last time, this is a very powerful zone. It came down and it just barely tapped it right here. It barely tapped price, and then it just turned around to the upside, almost got past 66,000, but then ended up coming down. Let's take a look. Like, why is this zone so important? So this really started way back in 2021. So there was an area here of consolidation. It came up, broke through this level. Actually, it turned around right here, broke through this level, ended up coming up, couldn't quite do it, and then broke up to an all-time high, came down, consolidated here for a little bit, tried to attempt this area one more time, and then came down, and then it ended up staying here for months. So at the end of last year, it just kept knocking and knocking and knocking at the door until it finally broke it in February. And then since then, it has been a downtrend since. But again, I do believe this is a bull flag, which means that you could run up to somewhere between 80 to 100,000 in a quick succession, pretty quickly. A lot of pent up energy in this market, and a lot of people waiting to pull the trigger. So it's exciting. No, it's boring right now because this is very boring. I'm not gonna lie to you, it's very boring, but it can get exciting very quickly, and that's what I'm excited about. So daily chart, it's even more clear, right? Again, this is a wave pattern. You see this one, we've had a massive push down, and I think we're at like a 22 on the fear and greed index, which is like extreme fear. So again, we're down here. That's understandable, right? But I believe also that you have quite a bit of protection. So let's see where the moving averages are. I forgot to put those on. So right now we're below the moving average on the daily. On the weekly chart, we're just now touching this 50 moving average, which is that's another layer of protection. Even on the downside of the support zone, you have the 100-day moving average. And then you also have on the monthly, let's see what we have. Yeah, we're not even close on the monthly, so that's not even worth considering. But yeah, daily and probably everything under right now is below the moving average. And you see that happens from time to time. It's not as common as you get below the 200-day moving average, but it's come down. You've gone up. It's come down below it again, this 200 moving average, and then one more time down here. So yeah, that's pretty much where we're at. Like in terms of like plays on the chart, again, there's not really a clear direction until you break out on either side. So for me, you would have to break out below 45,000 and get a sustained hold there for me to turn bearish. But even still, like there's just so much on the horizon that would turn it bullish that I just believe it would be a quick move down and then come up. And like I said, on the weekly chart, you still have moving averages there that are holding. So the much more likely scenario is that we go to the upside. The much more likely scenario is that we go to the upside and then reclaim this, get above this area, 67,000. You break above this all-time high. It'll probably pause there for a second. You get up to 91K pretty quickly. And then 100K is right in, it's right in view. It's right there. So let's look at, I think that's enough about the charts right now. Let's look at the actual what happened this week. And what happened last week? Yeah, so what happened last week? So you had the JOLTS jobs opening. That was a punch in the gut for sure. So like the last one they had was like 7.9 million jobs, and they were forecasting an increase to 8.9, but then they ended up dropping so they were off. They were very much off. It was like 7.6 million jobs. So a pretty big swing there from what they had. So overall, I mean, jobs have been going down since 2022, which also coincides with when they started hiking rates too. So now I do expect the labor market to recover in the near future. So non-farm payroll was that was actually also down as well. So they were previous was 89. It did end up going up from last month, but just not as much as they thought it would. So 164 for forecasted versus 142. That's a miss. Okay, this actually messes it up. Like if you go, yeah. So anyway, these past 2 months have been misses on the below side, just like something here too. Not much to note there. I mean, just basically this week, it was based on the data, it was pretty bad for the labor market, which would be another driver for them to increase rates in a couple of weeks. So I think that is a very, very high probability thing. So inflation numbers are coming out this week. That is a huge thing. So inflation numbers are coming out on Wednesday at 7:30 in the morning Central Time. We've been holding at 2.9 really about 3% for quite a while. They were talking about this magical number of maybe getting down to like 2%. I just don't see that happening realistically. Not for any type of sustained time. I think that is going to end up going up, but we'll see, right? One of the other things that we talk about is the Bitcoin miners. What are the Bitcoin miners doing? Because they are very important in this whole equation and how profitable they are, right? So hash rate is increasing right now. It has not, we ended a period of capitulation, a very long period of capitulation in July. And it's now continuing to go on the upside. So you see this blue line is above the purple line. So that means we are going up. In terms of hash rate, which means more miners are coming online. I think you're going to start seeing more and more every day. The difficulty is going to end up going up, but it's good. No, it's definitely good on the miners' end at this point. So that's good to see that trend is still continuing. And again, hash rate is basically how many computations you're doing per second. So like the computer power. How much computer power are you putting on the net per day or whatnot? So the other thing that I look at too is bar chart. They're pretty reliable, right? They tweeted this in January, and this is really coming from like Cross Border Capital and Michael Howell. So shout out to them. They definitely opened my eyes to the global liquidity and how money moves around the world. So the recurring 65-month cycle of global liquidity suggests stocks could be poised to benefit from increased liquidity in 2024. So that's saying that we're on a come up again. This was in January, so a prediction, right? I think we've done a little bit of this, but there is very much so the possibility that we could come up here with rate cuts. And I think we're starting to see rate cuts globally, not just in America and the Federal Reserve here in the U.S., but also like the Bank of China, the Bank of Japan, the Bank of England, so on and so forth, the European Central Bank, so on and so forth. But I think eventually we are going to see this liquidity rise to like your 60, somewhere between your 60 and 80 levels. Like they're going to end up printing realistically. They're just going to end up moving money around and getting it off the printer. So another reason to look into Bitcoin, because Bitcoin is definitely a hedge against inflation. You know what the inflation is going to be in the year, I don't know, 2100. You absolutely know what that is going to be because like it's programmed. They can't change it at this point. It's not like the Federal Reserve to where they absolutely can change what the inflation rate is based on what we believe is best at the time, which may not be best for everyone. But if you get to choose what you have, then it just it's better for you and your people. So again, this has been Chris Talks Crypto. Check out any crypto-based resources on christalkscrypto.com. Join the Pulse on Crypto Discord, and I will see y'all on the moon. Take care. Bye-bye. Have a good week.